Iron ore has suffered in China's property crisis. Vast amounts of steel are needed for putting up buildings and bridges and highways. The price of iron ore now down by more than a third this year and has dropped below the widely watched $100 a ton level. The giant miner BHP says prices should get support in a range between $80 to $100 as high-cost mines are forced to close. But that view could be tested if China's post-summer steel recovery disappoints. Let's get more from Reid I'Anson, Senior Commodity Analyst at Kpler. Reid, thanks very much for coming on the show.
Thanks for having me.
Is it weak demand or is it also overproduction of steel that's helping to weaken the market and push down iron ore?
It's very much both stories right now. If you look at China, obviously the demand story in China looks weak. Iron ore demand is largely driven by the property sector in China. We've seen multi-year declines there. What's interesting to watch, though, is that over the last couple of years, China has managed to maintain a relatively consistent smelting capacity. And despite the fact that demand for steel domestically within China has been pretty weak, they've managed to re-export a lot of steel to places like Brazil. But that trade flow is now coming under question because places like Brazil, the United States, and the European Union are actively implementing import tariffs. So this is making it harder for China to sustain its current smelting capacity given the weakness within China.
And Canada also moving actually to slap a tariff on Chinese Chinese imports of steel from China. Now, China could, of course, go ahead with infrastructure spending, so-called stimulus, but it would have to rack up debt to do that.
Exactly. We saw in Q1 they added roughly 7 percentage points to their macro leverage ratio, which they tend to use to track outright debt levels in China. And we did see an acceleration in industrial production and manufacturing investment, fixed investment growth in Q1, but it slowed into Q2 and is likely continued to slow into Q3 as the Chinese government realizes that the amount of debt it requires to keep that investment growth going is really accelerated. I think the question moving forward for the Chinese economy and for the Chinese government at large is whether they're willing to push more fiscal stimulus to households. That's really where we see a lot of weakness now in the Chinese economy. And it is our expectation that we will see some fiscal stimulus to Chinese households, just given the fact that the Chinese government would like to hit its 5% growth target. However, that's not really much of a net positive for iron ore or steel demand.
That's interesting, yeah, because it wouldn't directly translate into building. And the inventories of iron ore at Chinese ports now at their highest in more than 2 years?
Indeed, they continue to trend higher. And as I stated earlier, it kind of plays into the story where China has tried to keep steel production at pretty elevated levels, but they just don't have the domestic demand to absorb all of that production. And especially as exports could come under pressure in the coming months, could push, iron ore and steel inventory levels higher unless China slows the pace of its iron ore purchases and steel production levels.
What is your take on copper? Obviously tied to China demand, and pessimism has weighed on the price of that metal as well.
Yeah, we've certainly seen weakness in the copper price. We think it could certainly test, say, $4 per pound in the next few months. We saw that test earlier this year. However, unlike iron ore, I think copper could see a bit more of a baseline of support. We think that prices probably aren't going to push much below that $4 per pound level. Reason being, China is quite interested in its grid expansion, especially when it comes to renewables. It's very interested in driving EV production in China. And so I think unlike with the iron ore story, copper has a bit more of a baseline of support moving forward. And of course, the story is ongoing in the West too as we move through this energy transition. I think that the price of copper is likely not going to be super bullish over the next few months, but I think there is more support at around that $4 per pound level.